Hello, everyone, and welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Penny Pennington, Managing Partner of Edward Jones. Penny, great to see you. Thanks for coming.
Andy, it's a pleasure to be with you and your audience.
So I think people know about your company. It's a large financial services firm, privately held, with advisors and doing brokerage. But how would you describe the company, Penny?
Sure. We are a financial planning firm, today serving 9 million clients, a client in every county in the United States and all 10 provinces in Canada. We serve people across the arc of their lives, multi-generationally. We meet them where they are. And we're hyper-local. We are literally everywhere. We kind of have our pulse on we have our finger on the pulse of North American investors and families and clients. We are also a private partnership, and this is really important because it helps, it ensures that we determine our destiny for the benefit of our clients. We're 103 years old. Our historic home is St. Louis. That's where I live. But we're spread out now all over North America. And we're growing. We're growing in our numbers, and we're growing in our impact. By impact, I mean that we are here to help families become more financially secure, more confident in the futures of their lives, and raise their probabilities that they're going to be able to meet their goals.
You talked about growing, Penny, and you go to every town in America, and it seems like you see an Edward Jones office. How many towns are you in, and are you really growing at this point still?
Yeah, we are. We have 20,000 financial advisors all across the United States and Canada. As I said, we have a client in every county. There are 3,143 counties in the United States. There's a Trivial Pursuit answer for you. We have a brick and mortar location in 2/3 of those counties and a client in every county. And we are continuing to grow. Here's another fun fact. Our industry is having a dire shortage of human financial advisors for the desire that investors have. Investors want a human investor, and they want great technology. They want both, but they want a human in the loop as they progress in their lives and really approach these moments that matter. 100,000 financial advisors are going to retire over the next 10 years. We understand that the industry is going to be short on advice, and our industry, by and large, is not growing the number of financial advisors. However, Edward Jones has always felt a responsibility to do that. We have accounted for 108% of the growth of financial advisors in our industry in the last 10 years. That means the rest of the industry has shrunk, and Edward Jones has grown our number of financial advisors. So we're at 20,000 today. We'll grow at a 2 or 3% clip over the coming years. But the other way that we're growing is also in respect to the impact that we have. So our financial advisors are raising the level of their game. They are becoming more credentialed. We are the highest credentialed group of financial advisors in the industry, more CFPs under one roof than anyone in the industry. Over 50% of our financial advisors have one of 24 different designations that we support them to earn. And the reason that they're doing that is they want to practice at the highest level of their craft for the benefit of our clients.
Right. So thousands of towns. And how would you respond to people who ask you about saturation? I mean, it seems like you're all over the place. I understand you're replacing people who are retiring. There's a little bit of growth, but boy, isn't there a ceiling at some point, Penny?
We don't see it. That our research tells us that, again, people really value advice as their lives become more complex. So think about it, Andy. In my own family, I have 4 generations of my family alive today. And in one way, shape, or form, we are all planning together. My parents, who are in their 80s, planning for the way that they want to pass on their assets and their legacy to their 2 daughters. I have 2 daughters. They're buying homes, and they're in the really exciting parts of their careers. And then I have a new granddaughter. And what that means is that we're all thinking about our lives today, and we're thinking about the legacy for our families. We did some research several years ago, and what it told us is that investors, consumers, people who are thinking about the future in our country are concerned about health, family, purpose, and then a financial plan that puts that all together. And unfortunately, the right marriage of human and technology, advice, perspective, planning, and guidance is becoming more scarce. So we see this as a growth market, as a tremendous opportunity, but we have a responsibility to become even better at our craft so that we can go deeper with those generations of clients.
You became managing partner, which is the chief executive of the firm, along with your partners, though, 2019, 6 years ago. What did you set out to do? How would you rate yourself? And what do you have left to accomplish?
Oh, boy. Andy, our partnership agreement states that we are out at 65. So my tenure, if my health holds and I do a good job, will be a 10-year tenure. I have 3 more years to go. I've really thought of this as 3 seasons of leadership. The first season of my leadership, which began in 2019, was really resetting the ambition of the organization. This is something that every one of my predecessors, I'm the 6th managing partner in 103 years at Edward Jones. Every one of my predecessors has done this. And so I reset the ambition of the organization. It was about an even deeper commitment to more clients for comprehensive financial advice and guidance. It was about talent and technology. It was about our operating system, the way that we needed to make decisions. And it was about leveraging our partnership and our culture for all the good that we could do. So I set that ambition in 2019. We rallied as a firm to begin the process of achieving this next era. COVID hit at the second year of my leadership. And so the first year of my leadership was setting the ambition, but also recognizing how much was going to change and how fast. The second stage, the second season of my leadership journey has really been about putting in place all of those infrastructure builds to do those things that we set the ambition for. These are things like becoming a financial planning firm. Things like the announcement that we've just made about our partnership with U.S. Bank to provide more ease and simplicity, checking and credit card accounts, all in one place with the client's investments. This is about ensuring that we are everywhere that our clients are. So our high net worth brand, which is called Generations, financial planning for our clients, a workplace opportunity where we meet our clients at their place of work, which is frankly where most people start planning their retirement journey. This has been the second season of my leadership. And then the third season of my leadership, which is about to begin, my final 3 years, will really be consolidating all of that and ensuring that we're crossing the bridge to an AI-infused practice for more of our financial advisors, enabling our financial advisors to team together, to develop legacy practices, to serve multiple generations, and then frankly, getting the next generation of leadership set up to take this to new levels.
A very thoughtful game plan, Penny. I want to ask you about a number of things you mentioned there quickly, which is let's just start with your bank relationship with U.S. Bank. And I know that you guys looked to have a bank relationship several years earlier. Why did that one not work out, and why is this one the right one at this point?
Sure. Andy, what you're describing, let me just provide a little context. What you're describing is the need that our clients and prospective clients have to simplify their financial lives, to have one trusted team that's giving them advice on their short-term cash and income needs, as well as their long-term goals and investment needs. We want to be their financial homepage for all of that. So checking and credit cards, so saving and spending is going to be powered through our relationship with U.S. Bank. This is an app-based, easy to set up checking account. It's a great credit card. And then all of our clients can see their investments and their daily spending on one home screen. This is rolling out right now. One of the things that you referenced was a desire that we have and an application we have in front of the FDIC for an industrial loan corporation charter for a bank, an ILC. We hope to have that approved soon. These two things go together. Okay. Everyday solutions will go together with lending solutions that will be provided through the Edward Jones Bank.
Good. Thanks for clarifying that. You mentioned also the high net worth business, moving into that. Also, alternative investments. I know you're keen on perhaps offering that. When you go into a higher demographic, though, you're going to be bumping up against firms like Morgan Stanley. How do you look to compete against them? A, and then B, are alts really good for retail investors?
All right,
That's
two big
lot.
questions. That's a lot. Let's answer the first one first. Our high net worth brand is an experience. Generations is what we call this, and it's an experience. It's an experience of more sophisticated financial planning, of having a multiple generations of a family, a client surrounded by senior planners, investment managers, estate attorneys, CPA advice, philanthropy planners. And one of the things that makes this very different is that we do not supplant the trusted relationship that those clients have with the Edward Jones financial advisor. This intact team surrounds that family and this financial advisor with always-on advice for that family as they move through the next stages of their life. So that's one of the things that makes the experience very different. You mentioned the alts and a more sophisticated product shelf. Edward Jones has always been known for the access that we provide to high quality investments. We will always be known for that. As we think about the needs of different clients at different stages of their lives, clients that we're talking about here are those who've amassed a greater amount of wealth, that means more complex needs, and a greater need to have a well-diversified portfolio. In the world that we live in today, getting asset class diversification has actually become harder, and it requires those clients to think about going into different kinds of asset classes, including private securities. So alternatives, private credit, private equity, something that is available through generations. It's not available to all of our clients, and frankly, it shouldn't be available to all of our clients. My 30-year-old daughters who are buying homes, building up emergency cash funds, funding school for their kids, they don't need alts in their portfolio, but those who are of higher net worth, who need to spread that money out in a more even more diversified way, we are giving them qualified access to those kinds of investments.
Right. So getting back to the first question, your answer, competing against sort of the entrenched incumbents on the higher end, your strategy is, well, we're serving these families, and as they become wealthier, we're going to be naturally moving there anyway, right?
That's certainly part of it. Going back to this hyper-local presence that we have, business owners in particular, all across our country, amass wealth, doing all kinds of different things, and then have to figure out what to do with that multi-generationally. Andy, I don't have the absolute data on this, but we have 20,000 practices. I dare say every one of those practices has one or two high net worth, and in some cases, ultra high net worth clients. Oftentimes, these are first generation wealth clients. They have worked hard to build a business in their community and beyond that has tremendous impact, certainly on their families, but on their employees and on their communities. And what makes Edward Jones different is we live and work right where those businesses have been created and where they're thinking about their kids and their grandkids and what's next for them. So when we surround those families authentically with this deep, trusted relationship, when we care about their health and their family and their purpose, and then, of course, their investment portfolio and their financial plan in a very sophisticated way, then we're bringing all that is true at Edward Jones, the authenticity and trust of those relationships, into much more sophisticated and complex situations.
You mentioned the word advisor as opposed to advisors, and I know you've been transitioning a bit from a sole practitioner advisor to a more team approach.
That's right.
Can you talk about that and why you've been making that move?
Sure. Let me just give you a little bit of data around it. So 20,000 financial advisors today. We have 4,300 financial advisors who are practicing as teams or together in shared locations. This is from a standing start about 5 years ago. So why are we doing this? Well, our clients are very interested in seeing a team around them, in seeing the legacy of the relationship that they've had, and ensuring that that practice continues on for the benefit of their families. So our clients are very energized by it first. The second reason, our financial advisors want to do this. So I was just in Minnesota. I'm out at least once a month visiting with our clients, our practice teams, and our community builders. I visited with a practice team in Eagan, Minnesota. They are coming together, 3 financial advisors and 4 staff team members. There in Eagan, one very senior, multi-million-dollar producing financial advisor, a regional leader, so a producing financial advisor who also has leadership responsibilities in the region, and then a newer, less veteran financial advisor. The way that they're thinking about their practice is they want it to be a destination practice for generations to come. They're already talking about their kids eventually coming into this practice. They are CPA advisors, certified exit planning advisors, and they're applying all of those tools to thinking of their practice as a business. So how do they think about the progress of this business? How do they build their acumen? How do they build the dynamic of their team? How do they market their team appropriately? And I was there to listen to what they need and to ensure that their partnership, Edward Jones, is there to support them in that pursuit. And we have thousands of financial advisors who are pursuing the same thing.
And you didn't get pushback from the advisors as you try to do this, right?
Not at all. So Andy, here's the thing. This isn't mandatory. They're voting with their feet based on the needs that they see of their clients, the desires that they have for building a legacy practice. Remember, I talked about all those financial advisors who are retiring. Our financial advisors average younger than the rest of the industry, but the same thing is true. Our financial advisors are thinking about the next chapter in their lives. But they don't want what they've built to end. They want this to be a destination, their legacy to be a destination for years to come. And so they're thinking about the next 2 generations of professionals who will be in that practice. And we want to support them in building that.
How do you guard, Penny, against conflicts of interest where advisors might be recommending products that have fees that are too high and not appropriate or not appropriate for customers? I mean, it's a potential problem across the industry.
Yeah. Well, this is all about putting our clients' interests first. We are fiduciaries to our clients. It is our job to look into their future, to think about the kind of investment and financial plan that is right for them, to give them an array of choices about the product, but also about the way that they engage with us. So today we have a full array of choices. Would they like to work with us for us to provide them periodic investment education and advice? That's one way. Would they like to work with us on what we call strategic advice, learning their goals and ensuring that their investment plan matches those goals over time? And then full-on fiduciary financial planning, always on, across every aspect of their lives: legacy and risk planning, short-term cash and income planning, longer-term goals planning, philanthropy, and giving advice. And so our Financial Planning Plus, that's what we call it, Financial Planning Plus, is a contract between us and our clients that they are holding us accountable to that comprehensive care, to ensuring that we are meeting every element of their financial need, and that they can call on us for that integrated investment advice that puts all of that together and ensures that they're able to gain confidence, raise their confidence, and meet their financial objectives.
I know it's a private firm, but how satisfied are you with the financial results that your company has been producing during your tenure?
Yeah. Andy, we do very well by doing good for our clients. Business for good is good for business, turns out. And we have the DNA in our company, 103 years, the same name on the door, orienting ourselves first to our clients as a private partnership where we as owners can think about short-term results, but even more importantly, we can think about the investments that we need to make in infrastructure, talent, technology, $1.5 billion of change investment that we're making every year to meet the needs of our clients. I'm very happy with the returns, the financial returns. They are record-setting. Mm-hmm. And I'm even happier that we've achieved those returns by raising our own bar, by raising our game, by raising our ambition and expectation we have for serving our clients.
And final question, what are your customers telling you right now by their words and their deeds? How are they voting with their feet? What are they concerned about? How sanguine are they about the economy, about the investing outlook in the future?
Couple of things. I've just come back from 2 client events, one in West Palm Beach and one up in Minnesota. I'm headed out to Scottsdale soon. Every conversation with our clients becomes a multi-generational conversation. They talk to me about their parents and their kids and what they're worried about there, about their kids buying houses, about their kids' jobs. They're worried about their parents, about the longevity of their parents, and ensuring that their parents are well prepared for. So first, it's a multi-generational conversation. Second thing is, and I think we're seeing this across the industry, those who have built wealth, the affluent and the more wealthy, they're spending more money. So we are seeing net outflows at a greater rate today than we were pre-COVID. We think this is a long-term trend. We think that at every age and stage, people are saying, if I have the means, I'd like to create experiences for my family. And so we're having to help clients plan for needs, wants, and wishes that include those experiences with greater outflows from their wealth. One of the things that we've got to be very thoughtful about is the volatility that is likely over the coming few months and maybe years in the equity markets. I think I read yesterday, go back 75 years, this is the 5th strongest 6-month rally we've had over the last 75 years. So we got to expect some volatility. That means we've got to be planful as consumers, as investors, as financial advisors with our clients about the sequence of returns, about the next few years of returns, and making sure that we've got scenarios in place for different levels of volatility that we might see. And that's what we're talking to our clients about, and that's what they're very interested in, ensuring that they raise their confidence that we've all got that in place together.
Penny Pennington, Managing Partner of Edward Jones, thank you so much for joining us.
Thank you, Andy. It's been a pleasure.
This is at Barrons. I'm Andy Serwer. We'll catch you next time.